Had South Africa's production of platinum group metals soaring to 66% in February, while gold output fell 4.7% in volume terms. And joining us now to discuss the most recent mining data that's been released this afternoon is Nomvuyo Guma. She's macroeconomic strategist over at Standard Bank. Thanks so much, Nomvuyo, for joining us this afternoon. Let's get into the detail here and what you've made of the numbers that have been released, to what extent they've been in line with your expectations.
Hi there. I do think as far as the mining numbers are concerned, they are broadly in line with our expectations, Alicia. We'd been anticipating an acceleration in mining production that generally happens between, January on February number. We generally tend to see a higher number in February. So in this case, they've scaled, that's to say, has revised downwards its January number. And in contrast, then the February number, you do see that acceleration from a revised 6.7% to a current 7% year on year for February. As you mentioned, there was a huge uptake in the production of platinum group metals. This wasn't altogether unexpected. If you recall, this time last year, there was a strike at one of South Africa's leading platinum miners, and that in that month resulted in a nearly 50% year-on-year decline in the production of platinum. So simply on base effects, one would have expected to see quite a positive number coming through for mining production in February this year.
What does stand out then is that contrasting number we've seen come to the fore in terms of gold output, Nomvuyo, that declining 4.7% year on year in February.
Yeah, absolutely. I mean, I do think that the gold industry is unfortunately in long-term decline, and we've seen a series in the last couple of years of month-on-month production declines as far as gold is concerned. And so this wasn't altogether unexpected. Gold miners facing heavy cost pressures. The greater mining sector is, but I think especially in the case of gold mines, where mines are old, quite deep, and there's significant input costs in terms particularly of electricity and labor. So gold miners are really facing a tough challenge, and so in our view, it really wasn't all that surprising to see a continued deceleration in gold production.
What's your outlook for the mining space and your view on the miners moving forward, Nomvuyo, especially where you've got that rand factor to take into consideration as well? I mean, just this week we've seen quite a bit of strengthening, relatively speaking, coming to the fore, and we're sitting now below that key psychological level of 9 to the dollar.
Yeah, I mean, I think for the mining sector this year is going to be another challenging one. Even though we don't expect a resurgence of the strikes that hit the sector so badly last year, I do still think that they face a number of challenges. So they're the cost pressures that we spoke about, number one. Secondly, we see the potential for further slowdown in China's growth, which is going to impact adversely on commodity prices. And so we don't see that there's going to be much scope for mining production to really accelerate this year. Having said that, what we had last year was actually a series of strikes. So as I mentioned, there's the strike at one of South Africa's leading platinum miners in February, but there also continued to be strike activity actually into quarter 3. I think much of the public's attention was focused on quarter 3, where there was, that huge mining strike, but there was unrest in quarter 2 as well, and a bit of it carried on into quarter 4. So actually all of last year's mining numbers were, in our view, somewhat blighted by industrial action. And should we not see similar levels of industrial action this year, that could result in an upside surprise to the overall mining number. But we would caution that that wouldn't be reflective of improving global conditions, or wouldn't be reflective of a sector that is really starting to recover, but rather would be a reflection of the fact that last year was so unusually low in terms of production volumes.
So those are the kind of trends that are currently at play within the mining space. I mean, we're looking forward to manufacturing data a little later this afternoon as well, Nomvuyo. How do you see this trend feeding through into the manufacturing space? Because we've come across a commentary saying that, it's the demand from mining that generally does translate and feed through to the manufacturing space. And so the two are interconnected to a very large scale.
Yeah, they absolutely are interconnected, and you can see that even when you look at last year's numbers, that as soon as the mining sector entered into such severe distress, you started to see those manufacturing numbers coming off as well, and also reflected in a weaker PMI overall. So we think that the struggles in the mining sector for this year are also going to impact quite heavily on manufacturing. Speaking specifically of the February number, we are expecting an acceleration in manufacturing production to about 4.5% from 3.9% year on year in January. January. We think that that was precipitated by, firstly, rand weakness that came through at the beginning of the year that could have afforded a competitive edge to manufacturers, but also the ramping up in production that occurred in the mining sector in quarter 4 and also at the start of quarter 1 would have filtered through into the manufacturing sector. There's a direct link there of about 30% of manufacturing products going directly, mining output going directly into the manufacturing sector. So very strong ties coming through there, and we therefore think that the February number could be quite positive. But looking forward, not only are global growth conditions not conducive to a revived manufacturing sector, but also the struggles that we see ahead for mining are likely to also be reflected in manufacturing. So I think manufacturers are also going to enjoy a bit of a bumpy ride for this year.
Let's
well, not
leave it
enjoy,
there,
have a
Nomvuyo.
bumpy ride this year.
Thanks.